Best of the best, they join us on ET now to dissect that what this verdict means for the market. And Sunil Singhania joins us live, not from Mumbai but from New York. It's late in the night, but he's wide awake, and it's almost mid-afternoon, and Samir Arora has not opened up his can of beer. He's still observing the market. So, well, it's really a global afternoon, so to speak, with two Indian guests. So, Samir, let's start with the Punjabi tadka in your voice. What do you think this means for the market?
What it means for the market is more removal of uncertainty and doubt rather than, according to me, super positive things. The first thing was that when things could go bad and out of control in terms of fiscal discipline or in terms of new policies which the market should have taken time to adjust and accept and maybe first be shocked. But I am not in the camp which says that suddenly mega changes will be done by this government, because they could have done those changes 6 months ago and 1 year ago and nobody would have questioned them. They had similar numbers or higher numbers. So I think it is more of the same in terms of stocks and sectors that were doing well, and other things happen because there's a cycle. So with a cycle things change, and maybe once in a while you will help a certain sector or a certain divestment, say, of Air India, but others more of the same, which is not bad. I'm just saying I will not expect dramatic changes.
Sunil Singhania, will you be changing your positioning the way you've invested before 23rd May and after 23rd May?
So I think this verdict obviously is very reassuring. You have a continuity of government, and the mandate is also pretty decent. So the first term started with the fact that in the upper house, the NDA did not have a majority, and the first 2-3 years they found it very difficult to push through reforms, particularly GDP, GST, which happened towards the end of their first term. However, I think the key thing to note here, Nikunj, would be what their first 100-day program pans out to be. But having said that, we'll continue with our earlier stance. I think the domestic focused industry, predominantly capital goods, obviously the infrastructure pack, corporate banks, they would continue to be our favorites.
Right. Samir, we know who's sitting on the Iron Throne now, but we're already at 12,000 for the Nifty, 40,000 for the Sensex. Is the best already in the price, Samir?
Well, I hope not in one sense, which is that, if you look at it year to date, these larger indices are up like 5-6%, which is not good enough. So I hope it's not in the price. All I'm saying is that a big uncertainty has been removed, and therefore in the eyes of foreign investors, if that was one obstacle in committing larger funds or immediately funds, that goes out of the way, and there can be a little bit of more clarity on financial matters, as in fiscal discipline and interest rate cuts, whatever, but not so much a shift of sectors. But I hope it is not already good enough, but it's just that I don't expect big pop from here. It's just like a normal good market, which, is most of the time where you don't expect any big gains, but reasonable gains for reasonable effort.
But Samir, it wouldn't compel you to buy more, would it? Buy more of the same, but would you be buying more after this decisive mandate?
Oh, on Monday and all, we covered many of our shorts. So that way we have bought. But to buy really more, we need to get more, because we are otherwise reasonably invested. First of all, I am a bit surprised as to why people were waiting for today, because it would have been too dramatic to say after Monday that the BJP will not be able to form a government. And in my eyes, it does not matter whether they get 320 or 280. If they got 240, that would be negative. But what difference did it make to the market that whether it was 280 or 340? I don't think it matters at all.
Everyone's not as foresighted as Samir Arora is, right, to buy before the event.
No, Aisha, today markets have come on the right side of the event, so we can talk about, okay, markets breathing a sigh of relief, but trust me, if anything would have gone here and there, then we could have been, staring at an equally sharp kind of a reversal, because like experts have been pointing out, the valuation comfort and the real grand recovery in earnings is not there. Sunil, in the short term, it is sentiment. In the medium term, it is liquidity. When NDA 1 got a mandate, the Indian narrative got re-rated. Achhe Din was the narrative, great economic promise was the narrative, Sabka Vikas was the narrative. Do you think the FI narrative in the short term, which in a sense was not great, could change, and now you could get more inquiries, more flows into fund. So you, even though you may not like the valuations and the market levels, but if you get cash and liquidity, you will be forced to invest. Sunil?
So, I've met a few people. I've met a few people here over the last 2-3 days, and even in the press, a lot of coverage to Modi. At the same time, there's also a lot of coverage on what is happening on the US-China front, with a couple of this Huawei kind of companies getting a flag, and even India being mentioned in terms of Flectronics being not allowed to export out of India the Chinese products. So it's a combination of a lot of these factors. Having said that, I think one thing is very clear, that there was a lot expected from the first term, and to some extent it was fulfilled. To some extent, at least the business community faced a little bit of pressure. The second term starts maybe with a much more realistic or a muted expectation, and I think that is good, Nikunj. We have not seen the market go up 20% the way we saw it in the first time. As Samir bhai said, even after the exit polls, we had a market trending up 2-3%, which we gave like half of that over the next 2 days, and today also it's pretty okay. It's 2.5% up. It's not like 10% up. I think, which is good, and that also reflects the valuations. We are not cheap. So I think from here on, the market would take a cue from what happens predominantly on the earnings outlook. And I think that is where the first 100-day program, and predominantly tackling the liquidity issue, pushing forward the stalled sort of capex, and also, it's been a long drawn election process. Since February, the economy just come to an halt. So maybe, market just want the economy to start moving and back to work kind of a situation, So I think we should expect the model code of conduct to be lifted. RBI also, we here is waiting to, liberalize a little bit on the NPA recognition part. Maybe the liquidity, as I said earlier, would be reinfused. So I think these are the near-term trends which would dictate the market movement.
So, Samir, the second suspense of the second whisper will start now. What could be the shape of the cabinet? Who will be the next finance minister? Whom would you like to see as the finance minister? Whom do you think markets want to see as the finance minister?
I think other than finance minister, nobody will really care who's which minister. Maybe the road minister also is important and crucial from a stock market point of view. So we don't know what the difference between one finance minister's view on what he wants to do, or because the government has not laid out that these are the things that they want to do new, and that they were waiting for the election to be over and then they will implement them. Therefore, this is more a big picture. It really doesn't matter whether it's Piyush Goyal or Arun Jaitley, but broadly, we have not seen the sort of discussion on what are the things that different guys would want. So for us, for the moment, it's one BJP government with one of these reasonably acceptable finance ministers.
Like we've been discussing with most of our experts, last 5 years have been about demonetization. They've been about GST. You can call it that it was a little careless implementation. There's been IBC, there's been NCLT. From a market perspective, what would you like to hear from the government in the next 5 years?
Sunil, that's for
Samir,
you.
that was for you. Singapore.
So first thing is that I don't know about long term, but in the immediate term, although I don't think it's easy to do, but they have to recognize and accept the NBFC problem. Now the problem with doing something about this is that it's politically controversial, because sometimes you might be helping a particular 1 or 2 or 3 companies, even though you may present it as a package for the industry. And that, in the past 5 years, we have not seen this government go out of its way to help any one particular sector. So right now the issue is that, according to me, there might be a few bad things out there which are all waiting for a resolution on the basis that somebody will bail them out, whether there's a change of ownership or change of asset, as Jet or Diwan or Z or whatever. And my experience is that these things don't happen so easily in India, and even if they do happen, they don't happen in 5 and 10 instances simultaneously or within a short period of time. The second, according to me, is that the government has been totally unfair in the way of taxes for stock market investors, and particularly foreign portfolio investors. because we pay taxes at a fund level and we don't get the credit for that for individual investors, so he's doubly taxed. They pay the taxes in India, they don't get any certificate, and they pay again on the same gains taxes, and this is totally unacceptable, and it can only work if you think India is doing so well, which once in a while it does, that the investor doesn't care that he's being taxed twice, because either for half the years he was not making any money so didn't realize, or that he was making so much money that he didn't care. But in a normal instance, all these kind of unreasonable things should be sorted out and cleaned up.
Sunil, again, I'm just trying to address, say, the market aspect and the re-rating aspect. Now, to be real here, Sunil, if we believe that a lot of GST implementation, IBC implementation, which got implemented 2-3 years ago, 18 months ago, will start seeing its benefit in 12 to 18 months, which means there is a much more deeper scope for the cyclicals and the local plays to come back. Would you be looking at reducing IT, maybe reducing pharma, throw out consumers and buy pure infra, maybe some high beta names?
So I think pharma we have avoided completely almost, and it's not largely because of what is happening in India or not, but largely again, there are a lot of headwinds. There is a pressure on pricing in the US, which is the biggest market for the Indian companies. There is a resurgence of FDA issues. So the second round of FDA issues is resurfacing. So I think at this point of time, we are playing a similar sort of concept through the chemicals, where India has a natural advantage. China is undergoing a lot of pollution-related issues. The US-China trade tariffs also give an advantage to Indian companies. And with similar ROEs, the chemical companies have a much higher growth. They don't have the regulatory issues as pharma companies have. And at the same time, they are cheaper. In terms of IT, I think it's a decent sector. There's a lot of tailwind again in terms of a steady low or double-digit kind of growth rates. Stocks are not very expensive. So I think in the near term, obviously, it's the high beta domestic cyclicals which will outperform because of the event which is elections. But IT is a sector which would definitely not be ignored. It's a decent sector. So I think between IT and pharma, we'll go for IT.
Samir, which way would you lean when it comes to the traditional defensives, IT and pharma?
We have no pharma. Actually, we are short to pharma for 6-9 months, and we have IT. And I agree with Sunil, we also have chemicals, so that theme is fair. On infrastructure, I would not buy any for a long period of time, because currently infrastructure basically means that the government is your client, or you're doing something for the government, or you are making a road where the toll has to be approved by the government. And we have seen that these things are too risky in India. We have tried many in the past, but broadly in the end, either your approval doesn't come, or your toll rights are taken away, or you don't get your money in time. Basically, we want to avoid where government has a large role in terms of getting your money or your license in that sense or whatever. So we will not buy any infra. We can buy an infra input company, say like L&T, but not an infra owner. And I am not sure, forget about me, I am not sure who in India would set up a new infra project. And that I think is a big negative because of the huge disappointment to all the guys who tried to buy infra. If you see, all the distressed companies are all basically infra companies. And there has to be one winner for others to then try and copy that success. For example, when in the olden days, Jindal Steel and Power made a lot of money because they had merchant power. Because of one company's success at that time, maybe 20 guys set up. Of course, the 20 guys did very badly. But point is, you need one leader, one successful example, which others then get fascinated with, and then they do it. We don't have current leader or anybody.
Is there a scope for not a structural move, but a tactical move in PSUs? These PSUs are beaten down. The buzz on disinvestment has to pick up. Privatization has to move for government to, take care of all what their portfolio promise, is. Is there a trade in the SBI, BOB, other banks, ONGC, HPCL, BPCL, Sunil?
So, a couple of a couple of public sector banks definitely look interesting. We have seen a decent, operating profit growth in large PSU banks like State Bank and Bank of Baroda. So I think that is definitely a trade, and it's already played out. The stocks are up like 20-25% over the last 1 to 2 weeks, partly because of their operating profit performance and also largely because of the election results. I think some of the larger PSU banks do look interesting, but we'll tend to avoid the smaller ones because that is where the pressure on capital requirement and growth is going to be continuing. In terms of some of the other PSUs, I think oil marketing companies, obviously there will be a little bit of continuity and some positive sentiment arising from the fact that even during the election time, these fuel prices continue to be marked to market in terms of their retail price, and there was no subsidy which was given. However, they are facing some issues on the refining margins, and therefore that has to be seen. In some of the other public sector companies, there might be a sentimental boost. At the same time, if you see the policies, a lot of these companies used to get orders from the government on nomination basis. That has now been changed to competitive bid basis. So these companies will have to become more efficient, and maybe the margins might reduce. So I would be a little bit more, I would say, stock specific in this segment, and would say that if you want to play the PSUs, play it through a couple of the larger PSU banks.
Okay, let me start getting closing comments from our experts, because Sunil has to catch up with his sleep, and Samir has to just go get down to boat key and then start celebrating. Boat key, right, Samir? That's what you normally go?
No, below us now is Clark Key.
Clark Key.
Oh yeah, you've changed office. How could I forget? So Samir, we have to keep in touch. I have not come to your new office, so my bad.
Just one line I want to answer on this previous question, that you can buy any PSUs if you want, and I agree with the bank part, but please don't buy them on the basis that there will be some strategic divestment or something like that, the words that you used. All that ain't happening.
Okay. Samir, next 12 months from stock markets, what should we expect? Double-digit returns, or lot of returns for this year are already in the, have already come in the first 4 or 5 months?
No, they haven't come. That's what I was saying. If you look at, actually the mid-cap index is down, even the Nifty next 50 is down, some 5-6%. So far no returns have come, only it's been concentrated in the 5-7 Nifty stocks, particularly Reliance. So I would think that in general, as our old theory that earnings should grow 15-20%, you can do some here on there on PE, but you should go in double digits in rupee terms for sure. At least that's what we should expect minimum to be interested in this market, and we are very interested.
Sunil, the same question. Large cap stocks have massively outperformed caps this year. In the second half of trade, will that same trade hold true, Sunil, or will it reverse?
So a couple of things. Nifty has not outperformed the mid caps and the small caps for 2 financial years consecutively. We have already seen a big outperformance for the financial year 19. My view would be that the next year will belong to the mid and small caps. Also, I would agree that few stocks have contributed to the Nifty doing quite well. And maybe it is time that Nifty takes a breather and the rally spreads to the broader market. So I think our call would be a low double-digit kind of return for Nifty, but a much larger return for the mid and the small caps.
All right, gentlemen, fantastic. Thank you for joining us. Users of technology. All Sunil is in New York, Samir is in Singapore, we are in Mumbai studio, and celebrations are happening in Delhi. And celebrations are happening in Delhi. So that's what it is.